Hello everyone, this is Dan Gramza, and welcome to Gramza Market Studies for Thursday, December 10th. We were looking at the possibility that we had gotten low enough to find some buying and maybe a little bit less selling. That's what we were talking about yesterday. Looking for unchanged to lower, basically smaller moves. These are at critical levels, and that's also why you see these buy points so tight in some of these charts, is because I think on the buy side we wanted to be aggressive to get into these markets. The NASDAQ market reached magnitude objectives today, and what are we looking for? Well, we're looking for unchanged to higher tomorrow. We do have some things coming out again that could have some influence on what we see here. The NASDAQ was the healthiest out of all these markets. It actually moved the strongest out of these other indices. And what we are looking for is that follow through, and that's the critical piece. You and I were talking about that last week, right? The issue is, can we get a close above 1820? Well, and plus we're going to be coming into the end of the week. What kind of confidence level are we going to see going into this weekend? Friday will tell us about that. But right now, the issue is we want to see unchanged to higher. We really don't want to start seeing shadows again. That'll be the clue that you and I are looking for here. Now, let's look at those currencies. You can see in the euro, this market did rotate back. We're looking for unchanged to lower. This gave us that. The issue, though, is how it creates it. And this is a transition pattern that we're seeing here. This has a possibility of moving back up. The Swiss franc, same thing. We want to be cautious. So these buy points have been tightened up as a result of that. Some people asked me about this actually, and I forgot to mention it. We talked about it in the advanced video, but in the Japanese yen, this was a sell point. And in the day before yesterday, we did move through that buy point right here. That difference, just to give you a reference, was 290 ticks, or $3,625 a contract. That's the dollar value of that, the difference between those two lines, to give you a feel for that. And what are we looking for right now in this market? Well, we're looking for these buyers to maintain that momentum. We are getting at near levels that are significant in terms of potential resistance. So a sideways to higher is what we're looking for in Japanese yen. But here's what we want to keep in mind. If indeed these markets do start coming back, like the euro and the Swissy and that type of thing, we're going to expect this to weaken. You would look for the yen to be to back off. So on the buy side, which is what this line here represents, we want to be cautious because of the relationship, the interrelationship between these markets. Now, let's continue on. The Aussie dollar has, that has really strengthened here quite a bit actually since I had that buy point put in here. That's interesting. That means that would have traded through that buy point here in the night session. This is Asia right here, right now. And Aussie has really firmed up quite well actually in the Asia time zone. So that means it would have closed out that sell point. That sell point there was at 92.10. The buy point here was at 91.20. So that would be 90 ticks or $900. That's the dollar value of the move from that red line down to that green line. It would have also initiated a long position, and it has also reached magnitude objective here to the upside. British pound, again, we want to be cautious on the short side. A lot of volatility in today's action. This is actually a fairly bullish setup. So the issue is, how do we come back compared to this benchmark candle? Next 2 days will give us those answers. We are looking for an unchanged, possibly higher type move in that market. I say possible because it's also going to depend on a little bit what's happening in these other currencies. The Canadian dollar did a great job coming back yesterday, and nice and healthy. We're looking for some follow through in that market, unchanged to higher as well. This 95.50, it's kind of an important level. This whole range in here where we found sellers before, we want to see how this market reacts in those ranges. In the interest rate markets, well, we can see in the March euro dollar, the short end of the curve, not much going on there. Expect that to continue. But we were talking about the notes and bonds, being careful, and indeed we did find buyers coming back into this market. So the issue is, do they have an excuse to follow through? And excuse me, we talked about these yesterday. And if they do continue, it's going to be important that they do it within the next day. Continue in sense of buyers coming into this market. Same thing for bonds. They're in a transition pattern. This is bullish. We are looking for an update in those two markets. In the metals markets, we haven't talked about that. In gold, we still want to be short gold, but I think again we need to be very cautious here. This is at a level that we could easily find buyers looking for a possible change here, and that is because we have a false sense of security. We're looking for buyers to come back into that market. So sellers should be cautious. Same thing for silver. We're looking for kind of a quiet day in that market, kind of an unchanged type day. Copper, a little different. Copper, we are looking for some of that weakness to continue in that market. The issue, though, is where it is. Right now, we found a lot of buying at this level, so for this market to go lower would not be an easy thing to do. But that's the structure we're looking for. Crude oil did come off further. Really kind of an interesting move in that respect. It's taken out these shadows. That was a big deal. It's a nice, healthy move. That's what we want to see. And so it's, but if we see a change in those currencies and the dollar does get weaker, we may see a rally starting in this market. But we're looking for an unchanged kind of a day-to-day, relatively quiet. Natural gas, again, the issue was, can we get follow through? I guess the answer is no. Right where we found sellers before, we find them again. We are looking for this market to continue to back off in that respect. The difference that you see right here from this buy point to that sell point is 25 cents, and in this case it's $625 a contract. That's the dollar value of that move. And if we look over at the grains, well, look at Jan Beans, rallies up, creates a short position, and that breaks back to the downside. It did not reach a magnitude objective on the upside on this buy, and so that would have failed. That'd be a nickel or $250 a contract in that market. That's what that would represent. And we're looking for basically an unchanged type day there in that market. This is at a level that we found buying. So that 1020 is significant. So how it behaves here is going to be important. In corn, I think we've got to be very cautious on the short side in corn, and the same thing for wheat. I think the possibility for up days in both corn and wheat today are very real. So we want to be, again, cautious on the short side and prepared for a possible buying opportunity. Well, this concludes today's market studies. I hope you found a few ideas helpful. Looking forward to being with you again tomorrow. And in the meantime, take care.